Good morning, ladies and gentlemen. We would like to thank you for attending this webinar on our BL European Small and Mid Caps Fund. This fund, managed by Tom Michels, invests in small and mid-cap European companies and applies BLI's investment approach that focuses on a generation of attractive long-term risk-adjusted returns. The strategy is benchmark agnostic, conviction-based, and aims to invest in high-quality companies that benefit from solid competitive advantages and a strong capacity of free cash flow generation. The fund is classified as Article 8 of the SFDR regulations and takes into account ESG factors at different steps of the investment process. Before we begin, a few words about Banque de Luxembourg Investments. BLI is the asset management company of Banque de Luxembourg. We manage almost 16 billion euros through four main asset classes: equities, bonds, diversified management, and funds of funds. Our investment approach is based on active, conviction-based and long-term management. You can ask questions during the presentation using the question and answer system of WebEx. We will answer them at the end of the webinar. A summary of the conference will be made available in the next few days in English as well in French, alongside with the video replay. And now I leave the floor to Tom Michels, the fund manager of BL European Small and Mid Caps, who will give you an update on the strategy and the portfolio.
Thank you very much, Françoise. Hello, everyone. I hope you're doing fine. Thank you for joining this call. Then I propose that we directly start into the presentation. On page 4, I will give you a short summary on the investment case of small and mid caps. So why should you consider an investment in this asset class? Well, in my opinion, with investing in small and mid caps, you can invest in entrepreneurial companies which are more dynamic. They can positively develop their business over the long term, and you can participate during the growth phase of the companies. What are the interesting characteristics of these companies? What makes them so different from other from bigger companies, maybe, or what makes this company so interesting? It's 4 factors. They have a technological know-how. They often have niche products where they have no direct competitor because the market is too small for a big company to enter, but their position is too big for other companies to join the market. They have a strong focus on the business and flexible structures, so there are no large hierarchies where they have to pass through every level of the hierarchy until the decision can be made. They are very, very fast in their decision taking, and nevertheless, they have an international experience. And then this asset class fits very well with this BLI approach of investing. It's how can I say? It's quality companies for the long term. It's no speculation, and they're ideally positioned for convictions over the long term. So what is our philosophy in investing? Well, we are perceiving businesses like long-term owners, more like long-term partners. When we invest in the company, we consider ourselves to be part of a journey. So we invest therefore in companies where we can understand the business model. So we need a transparent and clear business model. We are looking for sustainable competitive advantages so that the business model is viable over the long term. We are looking for high profitability and for profitable growth. So the company has to be able to grow their profits. And then, of course, we stay disciplined on valuation, not that we pay too expensive a share. Our fundamental analysis consists of several steps. First, we're doing this qualitative assessment of the company's competitive advantages. So we're looking for companies that have one of those 5 competitive advantages here on the right side of the slide on the top. They can have at least 1, but also 2, 3, or 4 strong competitive advantages. The more, the better. Then we're looking for quantitative evidence of these competitive advantages. So we're looking for the profitability levels, operating margins. Then we are doing some more financial analysis on the balance sheet, on the capital intensity, and of course we are looking also on management. Are they doing what they are saying? Did they in the past prove themselves right? Did they say when we are doing this and this, they did it, so that we can understand and that we can trust the management that they will do what they are saying? And then of course we also do an whole ESG analysis of the company. We are looking for the capacity of the company for the free cash flow generation. And then we are also looking the growth drivers for the company. Are they viable? Are they there to stay, or is it just a short-term growth phase of the company? Okay, so enough with theory. Now going to what happened in the markets for the first 4 months. Well, as you can see, it has been a bumpy road for some sectors. Other sectors were a little bit less harmed, or they even did very, very, very well. As you can see, the blue line on the top, of course, is the MSCI Europe Energy Index. Of course, with high oil prices, the companies consisting which are in this index were quite well performing since the beginning of the year. With the war in Russia, as we all know, unfortunately, gas prices have gone up, petrol prices have gone up, so therefore these companies profited more than the others. And then on the other side, technology companies or consumer discretionaries or industrial companies which are more cyclical, meaning that when there are recessions, that their products are not so well, they are not very, very well sold. And industrial companies which need a lot of energy, for example, which are paying now a higher input cost for their production, they suffered more than other companies. So you can see on the three lagging sectors were industrials, consumer discretionary, and information technology. And the three top sectors were energy, telco services, and healthcare, as a more defensive sector, which is always good to have. Yeah, and then on market cap, what was performance there on the market? You can see large caps performed better than small and mid caps. As you can see, they were quite identically. Small and mid caps, just the large cap, they are basically 7 to 8% over the small and mid cap indexes, which is meant by larger companies. All these oil companies, public utilities companies, telco companies are much more bigger companies, and they are more represented in these indexes, and therefore they were less suffering. This index was less suffering than the smaller companies and the small cap indexes. So where are we in our portfolio? Just a brief overview on the characteristics. It's an active portfolio. We are roughly having between 45 and 50 individual investments. The initial investment of the companies is mostly based between 300 million and 7.5 billion market caps, but when the company is doing well, the market cap can go up until 15 billion or even higher if there is a low free float, for example. Then we can consider, and we can keep a company a little bit longer if it has a really nice run. We are looking for companies with competitive advantages. As I already said, we're looking for business model to understand. So all these factors you already know. And as Francois mentioned in the beginning of in the introduction, the portfolio structure deviates strongly from the European market structure. This is based on our bottom-up approach. We are not looking at an index and copy the index, but we are really doing conviction-based management, and therefore the concentration of portfolio is quite different, from our index. And also with our investment approach, we simply not find candidates in some sectors, for example, banks, insurance, telecoms, and utilities. With our methodology, it's very, very difficult to find their candidates. Okay, then we can look at our top 15, merely unchanged since our last call in October. The top 5 is still pretty much the same, except for Soprasteria, a French software company, which is now the 5th biggest position in the fund. For 2 reasons: the share price was doing pretty well, and I increased the position during the year and during last year also, when the investment was not done. Otherwise, no big changes. Then the same name as we have already seen over a couple of semesters ago. So therefore, I'm not losing any time on the top holdings. We can directly go to the sector allocation. So there you can really see that our portfolio deviates strongly from the index. You can see that we are much over invested in industrials, consumer staples, and healthcare and tech. In these sectors we find the most candidates, and then other candidates and other sectors where we don't find any candidates, like financials, utilities, or materials and energy, there we have no exposure at all. with our approach, we do not have any candidates in this sector, therefore we are not invested, and therefore you can see that we are not close to the index. The same counts for the geographical allocation. Then again, we have a strong overweight in Germany, Italy, and Sweden, and a strong underweight for the UK. On the market cap allocation, you can see that we are much more small cap oriented than mid cap oriented. That's just again the result of our bottom up approach. We have like one fourth of the portfolio invested in really small caps. Half of them are in small mid caps, and just 20% are invested in real mid caps as defined by the MSCI index. Okay, so just what happened over the last 6 months? 2 new companies were bought. The first edition was in January 2022, excuse me. It's a German company, Zewe. It's the European leader in photo finishing products. You probably all have already seen photo books that you can do online, where you can put your last holidays in, and then they get printed and sent to your home. Their Zewe is undisputedly the biggest in Europe. They have the best margins, they have the best product, they have the best technology. So therefore, they're ideally positioned to take further market share, because there are some smaller competitors that are not really doing money. They are actively buying their customer portfolio, or they are just doing more aggressive marketing in their countries to gain market shares in countries where they are not so popular yet. But the business model is quite proven. They have done a very, very good transition from on-site printing to digital services. So they managed to pass all this transition from digital photography, and therefore I'm pretty much convinced that this company has a bright future in front, and I'm very happy to have them in portfolio. Other company that I bought during the year was the Swedish company Thule. I can imagine a lot of you already have seen some products of the company. When you're going on ski holidays, you often see boxes on the cars to have more space for all the things that you have to put in the car. I really learned appreciating Thule after the first holiday with my child, where we had a lot more to take with us that I additionally sought. So I was looking for a ski box or for a cargo box, and I went to the shop, and the vendor directly said, just buy Thule, you are sure that it's pretty good quality, and they are just doing the best. We have other names, but everybody buys Thule. So I think I did the installation myself, but I can say it was very, very simple. I have normally 2 left hands with everything which has to do with some manual walking, but I managed to do 1,200 kilometers with the box on the car without losing it. So I'm pretty sure that it is easy to handle. It's the best quality. And again, the company is facing a structural growth plans with more active lifestyle, with more cars getting smaller for the electrification. So we need more space on the car. So then again, structural growth driver for the company, and they are ideally positioned to take further market share. Some increases I did during the period was DeLonghi, Compu Group, and that company. Mainly due to valuation, they were a little bit hammered down since the beginning of the year. Then I took some advantage to increase these positions. Then I did some trimmings on valuation, Comet, ME, Lam, Interroll, 4 Swiss companies. Investment thesis still not still intact, but just valuation was a little bit high, and I wanted to do some cash to make the acquisitions of these 2 other companies. So therefore, I was selling some of the shares in these companies. Now, unfortunately, to a less cool part of the presentation, the performance review. Before showing the graph, I will just show you the top 10 contributors and the bottom 10 contributors. The top contributors are mostly companies that last year didn't perform so well, because they are either very defensive companies, or they were a bit in the transition phase last year. And on the right side, you see the bottom 10 contributors. There you can see all the high flyers from the last 2 years, companies that profit from Green Deal, from stay at home, from e-commerce, all these companies that were really high flyers over the last 2 years. Since the beginning of the year, as valuations were a little bit stretched, they were a little hammered down by markets, and therefore, the net asset value of the funds was also suffering a lot during the first 3 months of the year. So on the sector basis, you can see that the underweight in energy has cost a little bit, but mostly my strong overweight in industrials and the stock picking industrials was not so well. So you can see I lost 3.6% due to my stock picking in the industrial company sector, and also in consumer staples, my stock picking wasn't that well. On discretionary sector, that was also hammered down. As you can see, this is the worst sector over the first 3 months of the year. I did a little better than the market, which is due to the stock picking, but it doesn't save me for the rest. So you can see that in the end, without any fees included, I am lagging the index by 7.3%, which is mostly due to the sector, due to the stock picking, where I lost 4.75% in relative performance. Just to get a visual on what happened on the markets, you can see that since the beginning of the year, it wasn't a nice journey. I lost a lot of performance already in the first week of the year, which was pretty painful for us, and then it continued until mid-March, where we have been on the ground until now. We do not know where we are going for the end of the year, but I did not arrive to close the gap to the index, so therefore still lagging the index by at least 10% for the moment. Since I manage the fund, so it's now from 1st of April 2018, I'm still a little bit ahead of the index and my peer group. So the last 2 years where the fund performed very, very well, where we outperformed the index by a couple of percentage points, it helped us a lot to stay in front of the index. And I cannot predict when the markets will turn in our favor again, but they will turn again, and we are not going to change now any soon our methodology, or we are doing something that we have never done before. So I stick with my investment philosophy. I'm looking now to find some interesting new candidates, companies that were a little bit hammered down since the beginning of the year. Still looking for in continuous quest for new companies, and there are some new companies now on the shortlist that are being actively looked at by my side. Okay, so there you can see the scatter chart. That's now since launch, so unfortunately the graph doesn't exist since I managed the fund, but you can see a little bit behind in performance, but doing better in annualized volatility. And the ratings, you can see last 6 months was quite difficult. You can see that I have been lagging the index, and I'm now pretty much bad position concerning the ranking. But over 1 year, you can see we're still first quarter, which means that we were doing a good job last 2 years, which allowed us to stay in front over the longer observation period. Well, that was all I had to say. If you have got some questions, feel free to ask the questions. If there's no immediate question, you can still write me an email, write your sales representative, or write at BLI. You can do as you wish. The question will arrive at my desk, and I'm more than happy to answer all the questions that could appear. Thank you very much.
Thank you, Tom. So, well, you just said what I wanted to say. So,
oh, excuse me.
No problem. Well, if at the moment I do not see any questions, so if there's no questions coming right now, I think we will close the call. As Tom said, feel free to send your questions to your sales representative. They will forward it to Tom, and he will be very happy to answer them. Thank you all for attending this call. Thank you very much, Tom, for time you
Thank you. No problem.
to do us this presentation. And I wish you all a very nice, hopefully sunny day. Well, thank you very much.
Thank you very
Bye.
much. Bye-bye.